Hi everybody, I'm Martin from Robalyst. What do you think about the Coca-Cola company? Let's talk about how they did in the third quarter of 2019. We all know that Warren Buffett has about 22 billion parked in the company. I'm sure that he spends much of his income buying Coke for himself and his kids. But well, that's what a lifetime fan does, isn't it? The overall picture looks mixed for Coke. Let's take a closer look at what really happened, because reports can print great numbers, but it's the reasons that can tell you the true nature of those percentages up or down. Knowing this, I'm pretty sure that you can figure out what is happening with sales and profits right now, and how are they going to look in the near future. Coke's net revenues went up a nice 8% because of the new Global Ventures division, which includes Costa Coffee. I have to jump straight to the main highlight. The introduction of Costa Coffee into the Coca-Cola corporate family masks the overall anemic growth of the company. To verify if this is indeed the case, let's go to Coke's vast geographies and products. Unit case volume increased 2% year-over-year because of two factors: 3% growth in original Coke and strong sales in zero sugar. Both products are part of the sparkling drinks category, and here we can see the volume growth of all the categories. Tea and coffee went up 4%. Sparkling drinks up 2%. Water and sports up 2% too. Juice and dairy increased 1%. Another thing that becomes apparent from that chart here is that sales in different categories are very unstable. Have in mind that those are year-over-year values, so this is not seasonality, but real ups and downs in sales. Let's go to Coke's worldwide markets. We can see that North America is of course the biggest one, with 3 billion in sales, but the rest of Coke's revenues are split between Europe, Asia, and Latin America, so each one of them is very important too. So, what happened there? EMEA revenue fell flat because unit case volume declined in Europe. We should have in mind that EMEA is the second biggest market for Coke, bringing 1.8 billion in revenues. Number 3 market, Asia Pacific, grew a better 3%, driven by volume demand in Southeast Asia, China and India. You can see that the number is still black in the system because Robalyst thinks that this is neutral growth, not a positive one. Going to Latin America, we can see a better 4% increase in sales caused by a 20% surge in price mix. It's an interesting question to ask: what happened with volume if a 20% increase in prices led to a 5 times smaller increase in sales? Finally, the important North American revenue rose 1.5% due to a 1% increase in unit case volume. If you're looking at Robalyst Live right now, you can just zoom out and see for yourself how all those numbers compare with the company's total revenues and growth. From sales to earnings, operating income fell 4%, hit by costs of goods and operating expenses. To be more specific, operating expenses increased by 15% because of a surge in sales, general and administrative expenses, big part of which are comprised of advertising. So, Coca-Cola likes to advertise herself, and we all know that very well. But last quarter it was just a little bit more than usual. Continuing with profits, operating income in the important EMEA region fell by 5% because of the strong US dollar. This is a chronic problem for the company, and the management likes to present some numbers in constant currency, showing the hypothetical situation where foreign currencies didn't rise and fall in value to the dollar. Of course, this doesn't change the fact that when you bring home lower value in dollars, it's just less dollars. Let's take a closer look at the company's net income, which rose 42%. The reason behind it was $670 million booked as combined equity and other income. So this high number comes from accounting standards and not from operations and sales. There are two major things wrapping up Coke's third quarter. The first one is the recently acquired Costa Coffee franchise, which is the real driver of growth and, at first glance, is masking the anemic performance of Coke's core sparkling drinks business. The second important highlight is that the overall decline in operating income was caused by company results in the US too, not only by the strong US dollar hitting EMEA. So, if you like Coke, go and sign up to www.robalyst.com. If you don't like Coke, go and sign up too. Ignore them, but take a look at Apple, Amazon or Bank of America. Get the answers you need when you're thinking about a company, because we got them on Robalyst. Thank you for watching. Subscribe to our channel so you know the things that matter. More companies, reports and regular content are on their way. Don't forget to tell us what you think and follow us on Twitter and Reddit. One more thing from me. Merry Christmas, and I wish you an excellent evening with lots of presents for everyone.